Hi, I'm Patu from freefincal. There seems to be a lot of confusion and misunderstanding about why Franklin closed those 6 debt funds. And so I thought I'll make a quick video to explain this. So, whether it's the economy or the currency or any kind of financial transaction, everything is based on trust. Credit and everything is based on trust. If that trust is absent and people start fearing, and if more and more of them start fearing, then the whole thing crashes down. That's why you have banks failing. That's why you have stock market crashes, bond crashes, and so on. So basically, these 6 funds from Franklin had excessive low-rated bonds in their portfolio. This is a well-known thing, and they have been doing this for many years. This is not new. And people who are investing in these funds, first of all, were supposed to know this. Many of them, I don't know, I mean, I don't want to get into that, but many of them think that high returns, they go by star rating and all that. Now, this is not a problem that came because of a credit default. Now, the Vodafone case that happened in January, I think, a couple of months ago, that was when one particular set of bonds in the portfolio defaulted, or the interest rate technically did not default, but there was a delay in the interest, and the credit rating had set the bond to a D, and therefore they had to mark it down. So they had to mark down the value of the portfolio and so on. That was a credit event that came because of the low rated bonds in the portfolio. Now, because of the pandemic, and because of the fact that big players who had invested in these funds, they needed money. Their own businesses were in shutdown, and they had problems for cash. They needed the cash, and they started fearing that these businesses where they had given the money to via the mutual fund, those businesses will also start defaulting. That such a default has not yet occurred, but they feared that the default would keep. There'll be one default after the other in the near future, and the trust went away. The trust disappeared at the same time. So they started redeeming. Now the problem is that when people start pulling out money from the mutual fund at the same time, the fund manager will have to sell the securities. Usually the fund manager will have 5% cash or 10% cash. They can handle small day-to-day transactions with that amount. But if people start, especially the big investors, start pulling out in crores, the fund manager will have to sell the securities. Franklin tried to borrow money. They borrow cash from some other third party and take care of these redemptions to some extent. But then SEBI has set rules like 20%, I think, and so those rules, so they could not breach that rule. And beyond a point, they had to start selling. When the problem is, even in a normal situation, when everything in the world is hunky-dory, it is very difficult to sell large amounts of A-rated bonds or B-rated, triple B-rated, triple B minus rated bonds, that kind of thing. It's very difficult to sell, and even if you sell, the buyer will demand a lower price, lower than the market value of the price, because they'll say, hey, you are selling a risky bond, I am buying it from you, so you sell it at the price I set. So the price, so the NAV will fall low, keep falling lower and lower if they sell it. Now, because the Franklin had to keep doing these sales continuously and in high volumes, the value at which they could sell them for, if at all they could sell them, was significantly lower than the market value, and that would affect the NAV. Beyond a point, then the NAV will just start falling down like a crash. To some extent, they managed it with the borrowing, but when they realized, whether they realized it late or not is debatable. I have talked about it in another post. But when they realized that if they have to start selling in large volumes, and if they start selling, the NAV will keep falling because they will not get market price. they had no other choice but to talk to the trustees and tell them this is the situation, and the trustees decided that it's in the interest of the existing investors, because those existing investors, especially the retail investors, they will be losing value every day because the NAV will keep falling. So in order to protect them, they had to do the right thing and close down the fund, because people, especially the big investors, lost trust in the fund. They did not lose trust in the fund management. They lost trust in the fund's portfolio. They believed that these bonds are going to default, so let me pull out. That risk was always there, but they believed together, everybody believed that things are going to fail. It is like what they say, you must have studied this in school. In a bridge, if there are soldiers going, if everybody march in step when they go on the bridge, then the vibrations will increase and the whole bridge can vibrate, and sometimes bridges can fall. So that's what has happened now. Everybody pulled out at the same time. The fund manager couldn't sell, or even if they sell, the NAV will fall lower than the market price, unjustifiably low, and this will hurt existing investors in the fund, and therefore they had to shut down. Please recognize this is not a credit event, and Franklin has not closed down because they think it's a bad strategy and so on. It is just that people who believed that investing in low rated bonds was okay until a couple of months ago have suddenly realized, oh, this virus, I'm going to pull out, and because of that Franklin had to close down the fund. Please realize that Franklin could not have suddenly, they also saw the pandemic come, and they also must have realized that things are going to be difficult, but they couldn't sell in the middle of they had to wait until the bonds mature. Before they we have a chance to find out whether they could change their strategy or not. This happened, and these are the facts. Whether you support Franklin or not, that's a different matter. Whether you say they have done the right thing, under the circumstances they had no other choice and they have done the right thing from that angle. But other than that, those are the facts and why they had to close. Other than that, there are subjective arguments that retail investors always fail, and always are the ones, not always fail, always are the ones who are going to suffer and so on. But those subjective arguments we are always going to do, but I don't want to get into that. These are the facts of the matter. Bye-bye.